Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today is Wednesday. We had a blood red day in the markets. However, we knew this was coming. We fully expected this, so hopefully, you all made money on the way down via those put options. So, before we get started, make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos, right? So let's talk about it. We know that last week Friday we had the Jackson Hole with Jerome Powell speaking, right? We know that he said that there was going to be more pain in the markets. There has been a deep fear of a recession for the year 2023 and for inflation going out of control this year. As of right now, there is so much FUD in these markets that will continue to plummet. But you and I have been looking at the charts. We've been looking at the market every day, and we should have been making money on the way down. We fully expected many of these things to happen. So it is not so bad for us. When you expect these things, you can prepare, right? Proper preparation prevents poor performance. So we properly prepared for all of the downside to the market. Now let's hope that potentially we see some upside coming within the next coming months. We know that tomorrow starts the first day of September. August has officially ended on the downside, right? August has officially ended on the downside, and we're going to take a moment and check that out today, right? But before I get into that, I just want to say that hopefully you all have been practicing. Make sure you're practicing. Make sure you're preparing yourself for what's to come, because this market is not playing games. We are experiencing a lot of volatility and pressure, especially to the downside. So what I want to talk about, we're going to take a look at the markets real quick, and then we're going to go into a little bit more detail. So here we have the Dow down 0.88%, the S&P 500 down 0.78%, the Nasdaq down 0.56%, and the Russell down 0.62%. Again, this is downside pressure that we fully expected, especially after looking at our charts. You all know I showed you the charts, and I'm going to get those ready so that we can view them. But I showed you all the charts, and I showed you a gap. I told you, hey, if it falls to this price, we can expect it to come down to this point and close the gap. And it came down to that exact point before it continued to come down even lower, right? We saw a little volatility in the markets today. We saw things try to open. They opened up green and tried to go to the upside. However, there was just too much negative pressure for the markets. Currently, we see the S&P 500 down 17.55%. We saw a beautiful 17% run up, right? We saw a beautiful 17% run up, only to see that joker come back down 8% in the matter of 2 weeks. It came down hot and heavy, 8.13% in 2 weeks on the S&P 500. So that is not looking good for us. We see the Dow down 13.87% for the year after running up it had a 14% gain from the bottom. Now from the top, how far is it down now? It is currently down 7.73% from our new top. So we seeing things definitely go back down definitely go back toward the downside, and that is not good for us. One thing I want to mention is I found this article that I really enjoyed, right? Stock futures fall after Wall Street closed out August with losses the entire month, you all. So we go back and just look at the month alone. The month alone, we're down 3.97%. But look at this. We were at the top. We were at the top in the middle of August 16th, only for us to see ourselves come back down that 8%. We were at the top on August 16th. Now let's see what we did on August 1st. August 1st to now, 3.97%. August 1st, we ran up at the beginning of this month a full 4.53%, only to come back down. You already know. So that really sucks, right? We losing money. We thought we had 3 great green weeks, and we thought we had a lot of bullish potential. We made money on the way up. Hopefully you all did, because I told you all, hey, we're running up to here, and this is where we could potentially come back down. And things happen exactly how we expected them to. So we're not at all fazed or hurt by that. So let's check out our chart. I want to show you all my chart. And we're going to take a quick look at just, a single chart. I usually have multiple up, but we're going to take a look at this one. So right now I have it on my 4 hour. You all see my gap here. So initially, when we first started talking about this, we started talking about it here at the supply. What was the supply zone? I told you all, hey, if it falls through the supply, we can expect to hit this one to the new demand zone. If it falls through that demand, we knew it was going to come down to here. And we talked about this just on Monday. If it falls to this price of 401.83, we could potentially see it close the gap all the way down to the 397.62 price. And it did just that. It did just that. So on the way down, you all, just from this point, just from this 419.99 all the way down to currently at 395.18. That is $10 at least that you could have caught to the downside over the matter of a week, 5 days, a 5-day period, $10 to the downside. Most of my put options are usually $40 delta, has a 0.40 as a delta, meaning $40 per dollar to the downside. So you could have at least made $400 in the matter of these days, this time frame. You really could have made more than that, to be honest. So 419, I'm doing my math wrong. 419 to 395. Y'all, let me pull up my calculator. I'm definitely tripping on my math. How y'all let me do that? So 419, I'm gonna put my calculator over here. So 419 minus 395. That's $24. I knew we had a $10 move in one day actually. So from 404 right here to 397, that's $7 right there. We continued down to 394. That was a $10 move. And this is the 4-hour chart. So this is over a matter of 8 hours. $10, you could have made $400. That's what? If you made it in 4 hours, that's about $100 an hour. So a lot of money to be made here, especially if you caught it at this peak, or if you caught it even further up here where I initially started telling you all that we could potentially reject. So if you saw your opportunity to do puts here and you had them out far enough, you definitely banking money right now. I know for me, I have definitely made a killing this past month, the past 3 months. I'm up despite the market going down, right? So hopefully you all are in the same position. If not, continue to follow along, continue to watch the videos, and we're going to make money the entire time. So the part of this article I thoroughly enjoyed. Investors are debating whether stocks will again challenge the June lows in September. Fears of recession, a historically poor month for market makers after weighing recent hawkish comments from Fed officials who showed no signs of easing up on interest rate hikes. So as of right now, a lot of the fears coming from the recession that people anticipate coming in the year 2023. We have seen many companies begin laying off in preparation. So we're seeing business layoffs, which means jobs decrease, which means that inflation no longer looks as good. The possibility of recession continues. We know that the Fed will continue to be hawkish, meaning the interest rates will continue to rise and hopefully prices decrease. So he's going to continue to push the big investment prices up so that wealthy people are no longer making as much wealth. So money is tightening, right? Money is tightening. They're tightening up the amount of money, cash flow throughout the economy by increasing these interest rate hikes. So we're seeing that happen. And all of this is just creating a cycle of fear. So here, another piece. If we retest the lows, I think it happens in September. SoFi's Liz Young said Wednesday on CNBC's Closing Bell Overtime. So just today, if we retest lows, she think it'll happen this month of September, you all. So based on what she's saying, September could be a terrible month, and we could potentially come all the way back down to here to what we saw back in June 16, which was 3666.77 for the S&P 500. You all can feel free to take time to check the Dow and the NASDAQ and the Russell on your own. But she potentially sees us coming all the way back down here. And this is definitely a major drop from that point. Definitely a major drop. So that's another 7% that we could potentially lose going back into the bear market. And if we hit that, what's to say that we don't go lower? So I actually think that based on looking at what I've seen, I think that we have the potential to bounce off of this 391.42. If we come below this 391.42, we can definitely say bottoms up and we continue to do our put options. But this thing is definitely going to run to the downside. However, it could also bounce off this 393.85. If it does, we have this gap here. Who knows what's going to happen there at the gap? It could potentially reject Right now, all I'm seeing is a lot of negative pressure to the downside. It's not looking good for us in this market, especially not for the month of September. However, I am always optimistic and I'm hoping to see a lot of green. I'm hoping that we have the potential to make a lot of money going forward, right? So, things to come. We know that in September we have CPI data. We know we have interest rate hikes coming from the Fed. Those are things to be aware of because those are things that could potentially continue to be negative catalysts for the market. As of right now, I believe that everyone is anticipating a 50 basis point rate hike from the Fed. However, based on their aggressiveness and the way that Jerome Powell spoke on last Friday, embrace for the pain, embrace for a recession is, I mean, quote unquote, not his words exactly, but that is basically what he said. Embrace for the pain, embrace for a recession because it is going to hurt. The markets are going to suffer. So based on that, I think that we have a possibility of a 75 basis point rate hike in the month of September. And I don't think the market has priced that in yet. So that could potentially be a major red day for us coming in a couple weeks in September. Just on top of the CPI data. The government is putting more money into circulation. What happens if inflation increases? Did we not meet peak inflation? So those are some things that people are really curious about. Those two things alone will definitely show some signs of where the market will go moving forward. And we're just going to continue to keep our eyes open. And we got to make our money on the way up or the way down, especially on the way down, because you want to keep that account balanced and very healthy throughout this recession, because millionaires are made during a recession. But yes, that is what I have for you all. I thank you all for joining the journey to become wealthy. Hopefully you all enjoyed the video. Make sure you like, subscribe to the channel. If you have any questions or comments, feel free to email me, inbox me, or just leave it in the comment section. And I'll see you all later. I hope you all have a good night.